Alright, so gang. Alright, it's your boy Nature, aka Nature. Alright, so gang, we're gonna be talking about Doji Candlesticks. Like I said, we're gonna be diving in and talking more and more about Doji Candlesticks so y'all know what's going on in the market. So this is how I make my money, so I want to teach y'all how I make my money. So Doji Candlesticks, a Doji called name is Doji. It's a name for a session in which the candlestick is for a security has an opening and a close that is virtually equal and are open in components and patterns. Doji candlesticks look like crosses, inverted crosses, or plus signs. So I talk about inverted crosses, plus signs. Y'all know about dragonfly candlesticks right here. We went over doji, long-legged doji, doji star. It's like same thing as like a long-legged doji, dragonfly doji, gray star doji, the four price doji. So these, when you see these doji candlesticks, you gotta pay special attention to these doji candlesticks. So these are doji candlesticks. So let's go into the definition of a doji definition. Then we're gonna go in a little into. I'm not gonna do all of them. I'm gonna do these videos short and then like y'all can watch them and then we just dove into the next one. So we're gonna do the first one. We're gonna do is just low. We're gonna first do doji. We're gonna do the long-legged doji, and then we're just gonna do them one by one. All right. So this definition real fast. Definition of a doji. What is a doji? Right. So we read this definition. A doji candlestick is security has an opening and a close that are virtually equal and are often components are in patterns. Doji candlesticks look like a cross, inverted cross, or plus sign. Alone dojis are the neutral patterns that are also featured in numbers of important patterns. A doji candlestick forms when the security open and close are virtually equal for given time periods and generally signals a reversal pattern for technical analysts. So usually this is symbolizes a reversal pattern for our technical analysts out here. So this is what we do. We technical analyze everything. We analyze everything technically. So this is technically analyzing everything to know what's going on. So it's a reversal pattern, and so when you see dojis, these are reversal patterns. So we have to pay special attention to what price one. So base here is a doji name is for a session in which the candlestick for security has opened and closed that are virtually equal and are often components in the patterns. Alone dojis are neutral patterns that are also featured in numbers of important patterns. Doji form in three major types: Greystone, Greystone doji, long-legged doji, and dragonfly doji. What we go over in OnlyFans. So depending on which the opening slash close line falls, a doji can be described as a gray or a dragonfly doji. So let's just go over long-legged doji real fast. Okay, it's a picture of a greystone doji, high price, low price. This is usually you're gonna see this usually probably I think at the bottom you'll see a grave, or no, you'll see at the top. I think you see a gravestone doji, long-legged doji. Usually at the bottom or top. You can either see these dojis anywhere at the bottom or top. You usually see a long-legged doji at the bottom. Dragonfly doji usually probably gonna see at the like on rising or could be on a rising momentum or downtrend. But you have to pay special attention to these dojis. So right now we're just going to go over this one doji real fast. Got this picture real fast. Alright. Right, bro. Thanks. Okay. You know what? I was going to just type it in, but it's right here. I did see long-legged doji. Right here somewhere. Okay, what is the doji? Oh yeah, let's go over long-legged doji real fast. So a long-legged doji, what is a long-legged doji? A long-legged doji is a candlestick that consists of a longer upper and lower shadow and has the same opening and closing price. This candlestick signals indecision about the future direction of the underlying security. It is used by some traders to warn that indecision is entering the market after a strong advance. It may also own downtrend may be experiencing indecision before making a move to the upside. So it may be experiencing um, um, indecision before moving to the upside. It's going to move to the upside more after you see a long-legged doji. I can tell you that right now. Again, I'll give y'all anything. Like, you already know that. Like, they already know. So, like, long-legged dojis may also mark the start of a consolidating period, and it does. The long-legged doji does mark the start of a consolidating period, and it'll be consolidating for a while, for like a whole. It might for me might be for a whole day. It might be consolidating for a period of time before it might go up or back down. So when you see long-legged doji, it definitely is the start of a consolidation period, and it just won't form one time. I'll tell y'all that game. It just won't form one time. It'll form like one, two, three times. You'll see long-legged dojis like, and you'll just be like, you'll think it's going up and down, but you have to. If it's not making an up trend and a down trend, it's not really doing nothing. It's just going up and down. It's consolidated. You have to back out when you're in the MetaTrader can actually see it. Like it's not moving up and down really. It's just going sideways. That's called a sideways trend. That's called consolidation. So it'll go through. So you see long-legged dojis after a consolidation period, where the price forms from one more leg. So when you see one or more, cause you'll see one or more long-legged doji before moving into a tighter pattern or a breakout to form a new trend. So it's very so understanding these long-legged doji candles are then deemed to be more significant when they occur during a strong uptrend or downtrend. The long-legged doji suggests that the forces supply and demand are near equilibrium and that a trend reversal may occur. So this what happened with gold the other day. Like gold's going up. Like I'm in that trade right now. Like in gold right now. Like it's gonna be going up for like the next month or two. It's supposed to be going up. So like there's gonna be a lot of chances to be in there and stuff. Like you fuck with me, gang. And you want OnlyFans and stuff. I'll teach you how to set your account up just with $50 and like get you started making money. Like you just gotta like, you know what I'm saying, gang. You already know. Definitely soon. So like it's worth it. That's why I was saying like $10 not bad. Like I'm you know what I'm saying. I'm keeping it at 10 right now. Alright, but you know what I'm saying, gang. Like that's gonna be expecting a lot of stuff like this, where you know what I'm saying. I can like, you know what I'm saying, teach y'all how to like make money off of this $50. You know what I'm saying, get y'all all game. So this is because it's an equilibrium or decision, meaning that the price is no longer pushing in the direction it once was. Okay, so this signals that that it's indecision and it's equilibrium, meaning that it's just going equilibrium, like it's just going sideways, meaning that price is no longer pushing in the direction it was. It may be changing. For example, during the uptrend, the price is getting pushed higher and higher in the close of a most period above the opening. Then long-legged doji shows there was a battle between the buyers and the sellers, but ultimately they ended up about even. Then consolidation period, where it was going sideways. This is a different than the period where the buyers were in control. Yeah, cause when the buyers were in control, it was going up on an uptrend. Then the doji showed up. Consolidation period, it's going sideways. We wait like a day or two, then we get back in. You know what I'm saying? Or like until we get some type of confirmation that it's going up or really back down. So this pattern could be found across any time frame, but has greater significance on a longer term chart as more participants contribute to its formation. It is part of a broader doji family that consists of the standard doji, dragonfly doji, where we've also been going over, and greystone doji. So I just wanted to give y'all this. The doji right here is the. This right here is the doji. When you see long-legged doji, you're gonna see a lot of long-legged dojis too, and dragonfly dojis. You're gonna see other dojis. It's like a lot of more dojis too that we gotta go over. Spin top dojis. So like different. We're gonna go over all the patterns and everything on here. So I got y'all, cause you know it's a lot of things. It's like 95% of this is all technical. So we gotta really go deep into it. So like I said, this is for y'all. This is all for y'all. So cause y'all like, you know what I'm saying. Y'all rocking with me, so let's get it. So key takeaways. The long-legged doji has a long upper and lower shadow and a small real bar. Examples of that too, like of a small real bar. You're gonna actually see it in here. So the pattern shows indecision and is most significant when it occurs after a strong advance or decline. So it has long shadows and long upper shadows and lower shadows. And it shows in this pattern shows indecision and most significant it occurs after a strong advance or decline. While some traders may act on one candle pattern, others want to see what the price does after a long-legged doji. Okay, so the pattern is not always significant, and it won't always mark the end of the trend. It really doesn't. It could mark the start of a consolidation period, and it does. 99% of the time, I think it really does mark consolidation period. I've been watching this market for a long time now. So it does do that. It does that a lot of times. It goes into a consolidation period, and and then before it may just end up being a significant pip in the current trend. So it's going to be reversed eventually. So long-legged doji trading consolidation, there a consolidation, although trading based on patterns is not required. The patterns is only one candles, which some traders feel not significant enough, especially since the price didn't move on a closing basis to warrant a trade decision. Some traders will want to see more confirmation the price movement that occurs after a long-legged doji before acting. So this is because long-legged dojis can sometimes occur closer or part of a larger consolidation. So dojis can form a large consolidation. A large consolidation meaning a lot of sideways momentum, meaning it's going to be and result in a major reversal period in a trend. Or consolidate or continuation, it may occur breakouts of the consolidation period. So if you're looking to trade the patterns, here are some general trading ideas. Pattern is viewed in the indecisive period. A trader could wait for the price to move above or high on the low of the long-dated doji. If the price moves above, enter a long period position. If the price moves below the pattern, enter a short period position. Ultimately, wait to see if the consolidation forms around the long-legged doji, and then enter a long or short position with price moves above or below the consolidation, respectively. So risk management for this would just be like the way to see if it's going to be entering. I'm gonna be telling y'all more and more about risk management and giving y'all structure and for like market structure and everything. So like this is like the long-legged doji. You're entering as the long price moves above the long-legged doji in consolidation. Place a stop loss below the pattern or move below the long-legged doji or consolidation. Place a stop loss above the pattern or consolidation. So a long-legged doji is more likely to give you a valid signal if it appears near a major support or resistance level. So for example, I'm gonna be giving y'all we're gonna be going diving in the market, showing y'all examples of long-legged doji so you can see how price risen or after a long-legged doji form, or how price fell and declined after a long-legged form. So taking long-legged doji don't have targets attached to them. So traders will need to come up with a way to take profit if any should develop. Traders could utilize the technical indicators or exit on the price cross a moving average. So we have moving averages. I'll tell you about moving averages too, and risk management and risk ratio. So if you're risking a $200 trade, the exit trade then will be up to 400 to 600 for you. So this proper risk management ratio, you want to get a risk 1 to 4. You have 2 will be 4 to 6. So that's how I was going to show y'all examples of what a doji look like in the market. On here they have a picture. Let's see if I can get it clear. Okay, here it go. It finally popped up. So this is what it looks like in the market. Long-legged dojis, they look exactly like this in MetaTrader 4. This is I think this is MetaTrader 4, but this might be TradingView. So it's a bit larger real body. So you're gonna see the real body. You see the real body. See if I can. There you go. You see the red body right there. You see the green body. Don't matter what color it is. If you see these doji, long-legged doji form, it doesn't matter what color. A continuation of a consolidation period continuating. So it's not really time to buy or sell. So a bit larger real bodies, but some would consider this a long-legged doji. Alright, so some would say this is a long-legged doji, because some say it's not doji, but it's a long-legged doji. So these are all long-legged dojis. They have long-legged dojis have real bodies, small real bodies, and long upper and lower. This is an example of what it looks like, and you could obviously down, but no, it's just consolidating. And I'm gonna show y'all examples of that, and so y'all can know exactly when to get in the market too, and more OnlyFans videos. So gang.